UBS bank analyst Erika Najarian joins us now. And Erika, I wonder, do you believe that this disparity in terms of performance between the biggest banks and the, let's call them medium to small, will continue?
Yes, I do actually, because when we talk to investors out there, there's still very little long-only appetite for regional banks. And the concern really doesn't have anything to do with the severity of what happened last year. The concern really is that perhaps they're not scaled enough, to really compete with the big guys for now. And consolidation is unlikely until we understand the results of the election. You still have potential pressure on deposit mix shift and deposit pricing. And so much of their fate in terms of growth and revenues are so tied to what's happening on the curve, which just shifted this morning. And so there's very little appetite right now for regional banks that don't have a single story, a single stock story.
Yeah. So what would, again, would a different regulatory approach change it? I'm just sort of curious as to what might be a catalyst either for, as you say, consolidation or just to change an investor viewpoint.
Yeah, so a couple of things. One, what would change investor viewpoint is if we put more cuts in the curve. I think there is a widespread belief, which I buy into, that not only will you get relief on the deposit pressures, but you'll also get a little bit of relief in terms of, the pain in commercial real estate if you do have some relief in rates. The other part, too, is consolidation has been very, very difficult during this administration, except for unique cases like you saw with Capital One and Discover. And a lot of banks are saying, look, we're not going to go through the process of, application and going through a long close like U.S. Bancorp did, unless we really understand how the administration changes. And that could definitely shift, timelines and willingness if we have different results in November.
Big news on the regulatory front from Chair Powell this week, who was on the Hill and who was asked a lot about the Basel III endgame rules. He said, I expect there will be broad material changes to the proposal. We were speaking yesterday with Rich Clarida, the former number 2 at the Fed, and he said it's a big deal. He took note of what Powell said as far as them going back to the drawing board a little bit when it comes to these rules that the big banks have been very wary of. What are your investors' expectations at this point about where this is going to end up and how it's going to impact business?
So it's pretty consensus that the Basel III endgame rules will be softened, if not reissued entirely. But, as we're, discussing regional banks, unfortunately, the benefits for them are scant. So, the large regional banks above $100 billion don't benefit as much from the softening of endgame. They also didn't get scoped as badly. But the real beneficiaries actually in softening are the card companies and also the money center banks, which goes back to the question at the top of this segment, can the big banks and big financials continue to outperform the regionals? And it seems like the tailwinds continue to be with the big guys.